The announcement of a very promising vaccine by Pfizer has certainly moved markets. So in this short video, I thought I'd just talk through what I see as the consequences of that announcement, but also its effect on markets and whether that's likely to persist. This is not a recommendation. If you want advice tailored to your specific circumstances, seek independent financial advice. So this is the actual announcement from Pfizer, and the thing which has caught everyone's attention is that the vaccine is 90% effective in preventing COVID-19. Because previously, many people had questioned whether there could be an effective vaccine against coronavirus. What this shows is that it is possible to create such a vaccine, and even if this one doesn't prove effective later on, there are others in the pipeline behind it. And if we want a quick look at that pipeline, you can see that there are over 150 vaccines which are in preclinical trials, 39 in phase 1, 18 in phase 2, and Pfizer's vaccine is currently in phase 3. So what Pfizer's success shows is that there could be other vaccines in the pipeline which could also be effective and released later next year. Unfortunately, as markets priced in this information, many people tried to trade it on the fly, and the IT plumbing behind the scenes just couldn't handle the volume of trades, and many platforms both in the US and in the UK have suffered outages. In the UK, the biggest platform is Hargreaves Lansdown, which also caused a great deal of anger when it said that it was having intermittent service problems. And if we look at the market impact, it's very clear that oil, and here I've got the USO oil ETF, which rallied hugely. It went up 6% on the day, with the biggest rise at the open, and then it tailed off slightly towards midday markets, which is when I'm making this video. The Nasdaq tracker QQQ shows that tech companies certainly weren't the beneficiary of this rally. Although they rallied slightly as markets opened today, they certainly tailed off towards midday. And if we look at the safe haven assets now instead of the equity assets, you can see that TLT, which is the 20-year plus Treasury fund, fell by more than 3%. And another classic safe haven asset, which is gold, fell by minus 5% if you look at the GLD fund. So if we look at markets very broadly, there's been a shift away from safe havens into riskier assets like equity. But within equity, there's been a rotation from the things which did well during lockdown and during the pandemic to things which are seen to do well coming out of the pandemic. Oil is an obvious example because as economic activity picks up, the demand for fossil fuels is going to increase. Now, within risky assets, in other words, equities, there was a rotation amongst the sectors, with some sectors doing incredibly well. We've already seen that because oil prices rallied a lot, energy has been a beneficiary, rising almost 10% on the day, but cyclical sectors like financials have also done well, whereas sectors which have done very well under the pandemic are the ones which have suffered the most, such as healthcare. But you can also see that the broad market in the US has rallied. Now, what characterizes this recession in the US, but also elsewhere, is that it's very much a service sector recession. If we look across countries, which you can see above me, the trade, transport, accommodation and food services sectors were the hardest hit, particularly in the UK, which has fallen by more than any of those other countries, whereas financial services weren't anywhere near as heavily hit. If you look at employment in the US, and here I've just shown professional and business services, which is the orange line, and leisure and hospitality, which is the yellow line, you can see the huge effect on the face-to-face service sector. And that would be a job such as being a waiter or a waitress in a restaurant. And there the impact has been massive, and we're still only about halfway recovered to where we were before the pandemic. Whereas the impact on professional and business services has been much more modest. So you can see in this tweet from Morgan Housel, this is a fairly common opinion, that there's going to be a lot of pent-up demand when people get vaccinated. What this means is that people delayed their consumption during the pandemic, and then after the pandemic subsides, people can finally satisfy those demands which they've kept locked away. However, personally, I think the nature of this recession as a services recession means that that pent-up demand argument is quite a weak one. Now, those people who know me know that I love Big Macs. I always have done. But I couldn't have them during the lockdown period in the UK. And now during the second lockdown in the UK, I'm denied McDonald's again. But that doesn't mean that after the lockdown ends, I'm going to go out and eat all of the McDonald's that I would have done if there hadn't been a lockdown. And if you think about energy companies, none of us are going to get into our cars and do extra driving after we get home from work just to make up for the money that we didn't spend during lockdown. That period of reduced demand is not going to lead to us consuming more after the lockdown ends. All that's going to happen is that we're going to resume levels that we were at before once things return to normal. And just because I couldn't make appointments to see the doctor or the dentist during lockdown periods, unless it was an absolute emergency, I'm not going to go out and book lots of appointments just because I can. And the same thing goes for holidays. Are we going to book lots of cruises? And Laura tells me this is what a cruise looks like. We certainly will book holidays again, but we won't book extra holidays just because we missed out on some. So I don't buy this argument that there's going to be a huge amount of pent-up demand given the nature of this recession. So if this vaccine is really effective, the question becomes, when is it going to help us? Here's a statement from President-elect Joe Biden on Pfizer's vaccine progress. And what he stresses is that it's important to understand that the end of the battle against COVID-19 is still months away, and that the timeline announced by industry officials say that vaccine approvals will only start to happen by late November. And even if that very ambitious target is achieved, it's going to be many more months before there's widespread vaccination. So for example, that Pfizer vaccine is very difficult to store. It has to be stored at -80 centigrade, which means that distribution may be an issue. And Pfizer will only be able to scale up the level of vaccinations into next year. So realistically, we're looking at the middle of next year before the vaccine starts to get rolled out on a large scale. Now, my problem with that is that this is pretty much what markets had already priced in. What we're looking at here is the past earnings in the S&P 500 in blue, and you can see the effect of the pandemic in the last 2 quarters. And according to broker forecasts, it would take until Q3 in 2021 when things would just get back to normal. Now, widespread vaccination will probably take until Q3 before it starts to have an effect. So at best, this is really going to bring the earnings growth forward by perhaps 3 months. And market valuations are still very high. In other words, the markets were expecting a very quick recovery from the pandemic, and that's exactly what we're going to see. So I think the upside from this news, once the euphoria starts to taper away, but also a tapering of the rally that we saw following the announcement of the presidential election results, we're going to be faced with fairly limited upside because markets were already priced very high on the expectation that things would get better quite soon. And for some companies, I think this news simply comes too late. So for example, today we learned that Peabody Energy would be entering its second bankruptcy in 5 years. And there are many other companies, usually small companies which employ a lot of people, which are in exactly the same position. This news comes too late to turn them around. So while this has been great news for companies in the travel sector in particular, such as IAG and Trainline in the UK, I think the effects of the pandemic will be with us for some time to come. So while the vaccine is great news and it's wonderful to see light at the end of the tunnel, I think markets got a little bit ahead of themselves. Valuations are very high, and I think many market participants were already pricing in a fairly quick recovery of earnings to levels that we'd seen previously. So I'd recommend that you have a look at a video I did about why markets are going to be weak in 2021. I think this vaccine does not affect a lot of the arguments I made in that video. And remember, now you can also join us as a YouTube community member by clicking on the join button underneath the video, and you can join us on Patreon and talk to me at any time. So as always, thank you for listening.